Today, yet another warning that we've got to listen to, that the Albanese government's green energy policies are going to destroy heavy industry, destroy our wealth. This is not politics and global warming, this and that. This is serious. It's real. Our nickel industry has already been almost wiped out by cheap nickel from Indonesia, where Chinese money's built cheap coal-fired generators. None of this nonsense that we have about wind and solar trying to power heavy industry. And this afternoon, the head of steelmaker BlueScope warned that something similar could happen here with steel, that he could shift more of his business to the US instead, largely because this electricity was so much cheaper, because of things like fracking for gas.
It's still very hard, Ross. We pay a half to a third, depending on gas or electricity in the United States relative to the energy costs that we have in Australia. I still don't think we've solved the problem here in Australia, the transition from fossil fuels to renewable fuels. For an industry like ours, a company like ours that needs reliable, affordable, renewable energy 24/7, if we have a better return for our investments in North America, then it's our responsibility and our responsibility to our shareholders to invest where we can get the best return. Right at the moment, given energy policy, given tariffs, given the reinvestment in North America and the stimulus that's being provided by the new administration, the rebuild of infrastructure, I think the US is the most attractive steel market in the world for us to continue to operate in, and that's where our investment is going.
You're being warned. This was after BlueScope reported a 59% fall in profits. Our richest woman, Gina Reinhardt, said the same thing last month, that she's looking to invest there now instead. This government is destroying our wealth and our future. Joining me is Leith Van Onselen, co-founder of Macro Business and a former Federal Treasury official. Great blog, by the way, Macro Business. I recommend you see it. Leith, thanks for your time. How much trouble are we in?
Yeah, look, Andrew, Australia's shooting itself in the foot. We used to have some of the cheapest energy costs in the world, and that made us somewhat competitive across our industries. However, through the closure of cheap and reliable baseload energy in favour of intermittent and unreliable and expensive renewables, and the failure to reserve our gas for domestic use, we now have given ourselves ultra-expensive energy. And as a result, we're seeing industry closures and our industry becoming uncompetitive. So in 2022, a major fertiliser company named Incitec Pivot shut down due to high energy costs. Last year, we lost our last major plastics manufacturer, Quinos. That left due to high energy costs, and now we're relying on imports from China. And just this month, we lost our only architectural glass maker, Oceanic Glass, partly because of high energy costs. And BlueScope, Orica, a whole bunch of other companies have threatened to basically, shutter the Australian operations because of high energy costs and shift over to the United States, where energy is a lot cheaper. And the fact of the matter is, Andrew, a successful modern economy needs reliable and affordable energy to succeed, and Australia has neither of those.
It's just so shocking to me, Leith. I mean, some of these losses are really strategic too, like the Incitec plant, fertiliser, that we can't make enough of our own fertiliser anymore when we're such a heavily agricultural nation. It's just unbelievable. The government is desperate for the Reserve Bank to cut interest rates tomorrow. And the bank will probably do that because, one, it doesn't want to shock markets, which have tipped it to do all that, quite heavily. But what I don't get, Leith, but you're the economist, why would it cut interest rates now when unemployment is relatively low and employment so high? It strikes me as dangerously inflationary to do it.
Yeah, look, it certainly is a balancing act. While the unemployment rate's below the RBA's forecast, mostly because of the boom in NDIS jobs, a whole range of other measures are actually tracking worse than what the RBA projected. So GDP growth's terrible, per capita recession for 7 consecutive quarters. Trimmed to mean inflation, that's the underlying inflation that the RBA actually looks at. That's below the RBA's forecast. It was only 0.5% in the December quarter. The last two reads give an annualised rate of about 2.6%, which is within the Reserve Bank's target. And wage growth is actually tracking below what the RBA forecasts as well. So, look, I'm expecting the RBA to cut tomorrow 0.25%, but I expect it to be a hawkish cut, which means that they'll cut but probably warn that they could lift interest rates again if data permits. So I think the RBA will just be data-driven.
Okay, all right. But now, can I ask you about something else, which is what I actually intended to ask you until I heard this warning from BlueScope. It's a big segue. Elon Musk, the world's richest man, owner of Tesla, owner of X, now heading a new department for Donald Trump to cut billions of dollars of government waste. Meanwhile, it strikes me that his own Tesla company might need his help. It seems to me it must be in huge trouble. It's been wildly overvalued for a long time, despite not turning a profit. Sales of Teslas around the world have dropped like a stone in January, 60% down in Germany, 63% down in France, 11.5% down in China, 33% down in Australia compared to the January before. Tesla shares now down by a quarter, although albeit from a recent high, record high. How much trouble is Musk in?
Yeah, look, I think Tesla's facing some really stiff headwinds, Andrew. So at the macro level, demand for electric vehicles, which let's face it, it was being stimulated by generous government incentives, mandates, etc. That is slowing globally. So basically, the early adopters who are going to buy an EV probably already own one, and EVs are struggling to penetrate the broader market. And there's good reasons for that. They've got very high upfront costs. There's range anxiety and concerns about inconvenient charging. They suffer from extreme depreciation. So as soon as you buy it, they plummet in value. And there's also really high insurance costs involved with EVs. So I think buyers are recognising that EVs can be an absolute pain in the backside to own, and they're instead looking at hybrids, which offer great range without all the downsides that come with EVs for charging and range anxiety, etc. So that's sort of the macro level, and then you've got the micro, well, the within industry stuff. So Tesla models are becoming pretty long in the tooth. They've been around for a long time. They're starting to look a little bit tired, and they're facing massive competitive pressures from cheaper EVs from China. So that's hitting them hard. And then there's Musk's growing unpopularity within the climate warriors in the left due to his alignment with Trump. That's also, I guess, damaging him a little bit. And the upshot here is that Tesla's basically losing market share within a market that's actually stagnating now. It's not growing rapidly anymore. It's actually stagnating, and governments are pulling back incentives across a lot of countries, including Australia, and the demand just basically isn't there because a lot of people are recognising that EVs aren't good for their circumstances. They're a hassle. What was that?
I think it's going to be big. I think the rearrangement of the stock price eventually will be quite big. This will be quite brutal, and I wonder what the repercussions finally will be. Leif van Onselen, thank you so much indeed for your time. After the